Hi all, in this video we are going to discuss about inverted duty structure and how to calculate refund under inverted duty structure. Inverted duty structure is where the rate of outward supply is lower than the rate of inward supply. So the rate of outward supply is 5% and the GST rate on the inward supply is 12%. Then we can go for refund of accumulated ITC by using formula in Rule 89.5. So Rule 89.5 was amended by way of a notification in 14/2022 from 5/7/2022. So this is an illustration giving you the impact of the change in the formula. So earlier the formula was the turnover of inverted duty supply of goods and services into net ITC by adjusted total turnover minus the tax payable on such inverted rated supply of goods and services. So in this illustration, we can see that the outward supply, we are having three different type of outward supply, that is 5%, 18%, and as well as exempted goods. And then input credit also, we are having input credit of inputs at 5%, 12%, input credit of services, as well as capital goods. So going by the formula, the first part is turnover of inverted duty supply of goods and services. So here the inverted duty supply applies in this case, that is 5% GST rate. So the turnover is 5 lakh. Net ITC means ITC of inputs only during a relevant period. So only the ITC of input should be considered. That is here in this case it is 2 lakh plus 1 lakh. The ITC of all inputs irrespective of the tax rate may be considered here. And then adjusted total turnover. Adjusted total turnover means total turnover minus exempt supplies. So here the total turnover is 12 plus 5 plus 1 and out of that exempted turnover should be reduced. So your net adjusted turnover comes to 12 plus 5, that is 17 lakhs. Then tax payable on inverted duty supply. Tax payable on inverted duty supply is 5% in this case, that is 25,000. So applying this formula, we get the turnover of inverted duty services, that is 5 lakh, into net ITC, that is 3 lakh, by adjusted total turnover being 17 lakhs. So the total of this is 88,235 minus the tax payable on the inverted duty supply, which is 25,000. So the net refund is 63,235. Now going by the amended formula, the council has amended the formula in this part, that is the last section. They have the tax payable on inverted rated supply of goods and services into net ITC by ITC availed inputs and input services. The idea behind this particular amendment is that in this 25,000, the tax that is payable, we can pay the amount using the input credit of inputs as well as input services. And hence that reducing the entire 25,000 is not correct. So this 25,000, that is the tax payable on the inverted rated supply, is adjusted in proportion to the ITC, net ITC on inputs by the total ITC that is availed on inputs and input services. So here it is 25,000 into the net ITC, that is 3 lakh, by total ITC availed on inputs and input services, that is 3,50,000. Even in this case, they have excluded the input credit on capital goods, so it does not come anywhere in the refund formula. So the amount of refund is 88,235 minus this adjusted the tax payable, that is 21,429. So your refund is 66,807. So in earlier formula we got a refund of 63,235, and whereas in new formula we're getting a refund of 66,807. So there is an increase in refund of 3,571 in this illustration because of the particular change in the formula.